Hello, how you doing? Good, I'm glad to hear that. My name's Mark McKenna, a realtor with Realty Executives. I've been a licensed agent for over 15 years, and I have helped both buyers and sellers throughout my practice. And I'm putting together a series of videos. One track is for the buyer side of the equation, and the other track is going to be for the seller's part of the transaction. So on this particular video here, we're going to start out with it's the first step of the actual process for buying, which is getting pre-qualified. But you're saying, hey, listen, you know what, I'm going to pay cash. I don't even need to bother with this. Well, you really do need to pay attention here because the lender is going to do their diligence in making sure that you're going to be able to pay back the loan for the house. And as somebody that pays cash for the home is saying, okay, well, I got the money, okay, now can you afford to live there? So that's really one of the things here that we're going to talk about here is the process of qualifying for that loan. Now it's broken down into three basic components, and it's really kind of common sense here in some of this stuff here. One is how much money you make, how much, what's coming in, and then what's going out. What type of bills you have to pay, and then how well you manage your debt. And that's going to be based off of your credit scores. Now, there's three bureaus that are out there. Okay, lenders will take the mid score between the two. They don't take the lowest score, but they don't take the highest score either. There's one in the middle that they'll ultimately take for your credit rating. So your credit score basically tells the lender your ability to pay things back. Are you good at it or are you bad at it? You got a low credit score, you're bad at it. If you got a good credit score, well, then you're pretty good at it. And they want to do business with people like that because it's less of a risk. And that means too that your interest rate is going to be lower as well. So that's just one of the things that becomes a benefit by taking care of and paying attention to your financial well-being. So the other aspect, obviously, as we mentioned about, is your income coming in. Just like anyone, if you're going to lend somebody $500 or $1,000 or whatever, you're going to say, hey, listen, can you afford this? You got money coming in here? What's going on? They're going to want to have a history. Usually it comes out about 2 years of your tax returns, and are you steady within your job? Are you bouncing around or not? Those type of things. And how does that money come in? They'll kind of critique that a little bit and set together a program that's going to work good for you. The other thing too is going to be your debt. What are you bringing into the situation here? So you got a car loan, you got personal loans, you got student loans, all this other stuff going on. You got to pay that back too, and you got to take that in consideration. So in short, and I'm going to just graze over this. This is something that the loan officer will go over to you in great detail. But it's important to know how it kind of works in general, so when they talk to you, you're not getting stunned with all this information. So the first part is basically it's going to be your gross income. That means before taxes. Okay, what's coming in on a monthly basis. Then they look at the ratio, of your total debt and what you could pay for a mortgage. And typically that's going to be somewhere in the neighborhood of about 30% of what you make $1,000, so $300 or so has to be set aside for a mortgage payment or so. Just to use round numbers. And including all your debt, so not just your house payment, which would be your principal, your interest, your taxes, and insurance, but and also HOA, which is the Homeowners Association, that gets thrown in there, even though it's not part of your mortgage payment, but it is considered part of your housing expenses. So all that kind of gets put together, and that ratio, that has to stay within a certain percentage of your total income. But then all of a sudden you got that ratio, so you got that number, but then also they want to take a look at all your other debt in there. So if you have, a whole bunch of car loans and other things that you're obligated with, then what they're going to do is that ratio is about 40%. They want to make sure that you have enough money left over to live and have fun and do whatever you want to do. That's their perception on, saying, hey, this is what you could afford. Your perception may be different. You might be saying, I could have 90% ratios. I mean, I can only live on 10%. I'm fine with going watching a movie online, and that's all I do for the whole year. That's fine, but the lender is going to say no. That's too high. We're not going to do it. We're not going to lend to that. So that's the basic setup of what's required to order to qualify for a home. So we want to make sure you actually get set up with a lender that has access to all the different loan programs out there. You go to some of the big boys out there, Bank of America, those type of guys. They only have certain specific programs that they work with for their clients, and that's it. That's their portfolio, So they're looking for a certain type of person to lend to. We go to a broker, a financial broker there. They're going to go ahead and have access to all the different loan programs, because what they're going to ultimately end up doing, some of them will carry the loan to maturity, but most of the time they're going to go ahead and sell it on the secondary markets. So there might be other additional overlays or additional conditions that have to be met. But they're going to, again, the pre-qualifying process, if you got a good lender and a loan officer, they're going to be able to make sure that you're fully qualified. There's no surprises at the end of the process. So if you have a hard time picking one or whatever, that's where the real estate agent, myself, a realtor, that you would go ahead and talk to and say, listen, I'm thinking about buying a house, and I need to get hooked up with a lender. Most agents will have a variety of different lenders that they work with that specialize in different types of situations. For someone like myself, I've been doing this for 15 years. I have a wealth of different types of lenders that for very specific type of financing needs, VA, FHA, USDA, the whole 9 yards. So they're all different programs. Not everybody has access to with the great competitive rates, So it's important. Anyways, I don't want to keep this too long here. This is going to be a little bit, longer of a video because it's the start of the actual buying process. But if you have any questions or so, or just wanted to talk, there's no commitment, no nothing. I mean, just information here. That's where I'm doing. Give me a call or so. You'll see the number. I think will probably show up on the bottom part of the frame here. Have a nice day, and we'll talk to you soon. Take care.